On Thursday, February 27, 2020, the Dow had its worst one-day drop of 1,190 points in its entire history. There was over a 10% drop in the Dow in 1 week, a full 3,200 points. The S&P had its largest percent drop since February of 2018. 6 days, a 10% drop, $4 trillion was gone. $4 trillion gone in just 1 week. The S&P had its fastest drop in its entire history in that week. Just 1 week earlier, the Dow was at record highs. It was the 11th year of the Obama recovery. These are just the facts. I don't make this stuff up. It's just the facts. You can check them anywhere you want. These things happen. We're in a global economy right now, and so we're affected by what happens in the global markets. So what actually happened? What caused this problem? What happened that made that drop so dramatic so quickly? The coronavirus. It's been the news all that week. The entire week it's been the coronavirus. The coronavirus started in China in January 2020. A month later, the end of February, it affected 50 countries. 50 countries. It spread that quickly. Countries like Italy, the UK, Germany, France, Spain, most of the European Union nations, the Middle East, India, Pakistan, the Philippines, Brazil, as well as Canada and the US. It's like a super flu, but what's different with this one is it's a 24-hour incubation period, which makes it extremely difficult to track. Because by the time they get infected, you don't even know what's going on for the next 24 days before you show any signs and symptoms. Just think for a second. How many things do you touch in a day? In one 24-hour period, how many things do you touch? How many people are in a 6-foot proximity of you that are breathing or coughing or sneezing on you in 24 hours? Now, you multiply that by 24 days, and you can see just how difficult this is to track and why it's going to go to these proportions so quickly, why it hit from one country, China, to 50 countries in just a month. The effect of that was that there were 2,800 deaths worldwide by the end of February. Also by the end of February, there were 59 confirmed cases in the U.S. itself. Disney Tokyo closed for at least 2 weeks. They're concerned. Entire cities were being quarantined. 14 cities in China, 12 cities in Italy, 1 actually in Germany. Major companies are canceling their global conferences and their summits. They don't want to send their people anywhere on risk that they can get infected here. Now, what's the outlook for this? This is a full-blown global pandemic at this point. That's what the outlook is. It's crossed international borders. People have died because of it. Economies move slowly, but markets turn in a second. Growth is already slowed because of trade wars. Major investment firms like Goldman Sachs, Citigroup have already revised their projections for 2020 to a 0 growth for the entire year. What does that mean? People put money in the markets because they want to make money. They expect a rate of return on their money. So if companies don't make money, then they don't declare a dividend to their stockholders. If the stockholders don't get a dividend, there's no reason to invest in the stock. The stock is flat. It doesn't appreciate in value either. This is just the start. It will continue. We're only a month or so into this at this point in time. This is not looking good. The U.S. is not prepared for this. And the problem is, no one knows how long it's going to last. That uncertainty is what drives the markets down immediately. That uncertainty is what drove the markets down over 10% in just a week. And the S&P lost $4 trillion in just a week. What does that mean to you? Well, if you're in your early 20s and the 40s, you don't care too much. You don't want to get sick. You don't want your family getting sick. And you don't know how far this is going to go in the U.S. And it's going to continue to grow. This is like a really bad flu that's going to be spreading very quickly. Now, it could be a month, 2 months, 3 months. It's going to at least continue for the next couple of weeks. No problems at all. That's going to happen. If you're in your 20s, early 40s, you don't mind the stock market crash that much. You hate to lose money, but you've got some time to recover. Now, if you're in your 50s, you're a little bit more concerned because your time frame of expecting to draw down on those funds is a little bit closer. By the time you're 60 plus, you're really concerned. You're looking at retirement right now. This is happening right before you go to retire. What's going to happen? Your money's sitting there, and all of a sudden, 30-40% of it could be gone. That's what happened in 2008. 43% of the market dropped out. People that were ready to retire, they got screwed. And to this day, some of them haven't recovered. It took 16 years for most normal people to recover. Some people just didn't recover at all from that 2008 crash. Is it going to be that bad today? I don't know. But the problem is nobody knows. Okay. Now, if you're already retired, you're really screwed. Because everybody acknowledges that, oh yeah, every 7 to 10 years the market's going to crash. And people have been on this sugar high for a while now because you've got 11 years of recovery from Obama and life is grand. Well, there's not much to do at this point in time. The Fed has already cut their interest rates, so they made it almost impossible to go any lower. They can't give the money away. They're almost giving money away at this point in time. Okay, that's the idea of to stimulate the economy. Okay, but if the interest rates are already low and there's no business, it's only going to get worse. They can't do anything at that point in time. So if you're retired, okay, nobody ever told you, nobody ever mentioned to you that you're going to have to live through at least 2, possibly 3 market crashes while you're actually in retirement right now. While you're in retirement, 2 to 3 market crashes before you die. Where's the money going to come from? You're just barely surviving at this point in time. So what do? This really seriously affects your lifestyle. So the financial people have always been telling you, diversify, okay, dollar cost average, buy on the way down, you'll get more shares at a lower price, fewer at a higher price, that's lovely. Buy the dips, you've heard all these things before. But the reality is, you need a portion of your money under your control. You can see what happens with the stock market. Things just happen out of nowhere. A month ago, at record highs. Now, a 10% drop in a week. Who would have known? You had no clue. Neither did all financial experts. They had no clue either. Things happen quickly in the market. So, what do? How do you get a portion of your money under your control? Well, I've got a program I put together, and it helps people do just that. It helps them retire in 2 to 5 years, and starting with as little as $10,000. And you can sidestep all these major market roller coaster actions with that money. Now, you can't go out and buy a Lamborghini every other month. It's not going to do that for you. It's not a get-rich-quick thing. I do this in my retirement to help people out because it's what I can do. It took me 10 years to develop the program, and I'd like to help some people out. If I can, that's great. Now, if you're looking for some way, an option for you to retire in the next 3 to 5 years, to have predictable cash flow totally under your control, then I might be able to help. Go to drrousenow.com. Take a peek and see if you qualify and if I can help. Go to drrousenow.com and see what happens.